What is included in a mortgage payment? Well, that's a question that I get from a lot of my clients when we sit down for the first time and they're looking at buying a house. Let's say they haven't met with a lender or what have you, but they just want more information to know if it's actually affordable for them to go out and buy a home. Well, I'm Jason Dowdy with Weichert Realtors Tower Properties, and I kind of want to break it down just a little bit for you, and we're going to try to simplify it. So let's just say, for instance, we go out and we find that beautiful, gorgeous home, and it's $100,000. We're just going to use $100,000. Probably not finding the most spectacular home for $100,000, but let's just use it in this example. So we buy a house for $100,000, and you're a buyer that says, you know what, I got 20%. Let's put that down. So we put 20% down on the house. Now we've got a mortgage for around let's just say $80,000 after closing costs are paid and everything else, right? So we've got a mortgage for $80,000. Now that lender is going to loan me the money. Let's just say on a 30-year term. It could be 25, it could be 20, 15. It really depends on what your criteria is and what you make with the lender. But for this scenario, let's just put it into perspective on a 30-year mortgage. So if we did a 30-year mortgage, and let's say the interest rate at today's rate are around 6%. So let's just say 6%. Now, let's say that 6% is going to cost me $479.64. Sounds pretty good, right? Now, here's the deal. As long as you continue to make your payments and you own that home for the next 30 years, you don't pay any extra money on the mortgage, you are only going to have to pay $479.64 for the next 30 years. That's a great amount. It's exciting, right? But there are other factors that are going to go into that mortgage payment, which are going to change your rate yearly, okay? So let's talk about property taxes, okay? When it comes to property taxes, they're going to change. They're going to fluctuate. So let's say on this $100,000 gem that you just bought, that the property taxes are $1,800. Now, that's just for year one. After you buy the house, they're going to reevaluate it. It's probably going to go up. But for that $1,800, your payment is now going to go up to $629.64 a month. Okay, so the bank's going to probably put that in your mortgage payment, unless, of course, you decide or you elect or you agree with the bank that you can actually collect that money yourself and you're going to pay the property taxes. Now, the bank will offer to escrow that money. That's them just collecting the money from your mortgage payment every month. They put it in an account, and when the tax season comes around for your property taxes, they're going to pay your taxes on your behalf. Okay, now, the other part that's going to come into it is insurance, right? We all need insurance on the home because things happen. Now, let's just say the insurance on this home is $2,200. So with that in there, between the purchase of the property and your mortgage payment, the property taxes, and now throwing insurance of $2,200 a year, that's going to change the outcome of our total monthly payment of $812.97. That's what you're going to pay. But like I said, it's going to fluctuate every year, but that's typically what you can expect or how it's broken down. So talk to your lender, talk to your real estate agent. They're going to educate you on this, okay? There are other options. Like I said, you can pay your insurance out of pocket yourself. You can pay the taxes and just pay the loan payment back to the bank. So this is just one of many great topics. If you'd like more information about this, feel free to give me or my office a call, and we'd love to talk to you about the process of buying a house and what it means to get a mortgage. This is Jason Dowdy with Weichert Realtors Tower Properties, and we do look forward to opening your doors to bigger dreams.